The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, on Tuesday, we saw a grain market that tried to extend Monday's rally, but kind of settled back into mixed territory. Livestock trade was mostly to the downside slightly as well. We're going to talk about all of that here today. Joining us live for a market conversation as we are kicking off our week at Commodity Classic in Houston, Texas. Jacob Burks with agmarket.net. Good to see you, buddy. How are you?
It's good to be here. I didn't think I was going to make it, but here we are.
I was going to say you had a little bit of plane trouble getting down here last night. Nothing scary like going down or anything, but just delays, that kind of thing, right?
Yeah, I made a quick little travel down here. It's a 2-day event, so that was fun.
That happens to the best of us. I'm surprised they let both of us into Houston.
Well, we made it. I mean, at one point I thought I was going to have to do it myself, but we found the pilots, and there we were.
Well, good to have you here. Thanks for joining me for Market Talk today. And start of the week, I was worried that these markets, the grains, were going to slip lower. We got a nice little rally, nice little short covering rally there. Tried to extend it, though, Tuesday. It felt like we kind of ran out of gas towards the end of the day, Jacob.
Yeah, I was very optimistic, early with the beans, especially. Had a strong, I think, double-digit higher at one point, and then backed off there throughout the day. Corn market, you look at it, a lot of the technical resistance that we had over the top of it. The new crop actually closed for the first time since the end of January, closed above that 10-day moving average. Kind of rejected it in the front months of the corn and beans both. So you still have some strong technical resistance above this market right now. So we've talked a long time going through the first of the year about how these small rallies are going to get sold. There's just a lot of corn out there. And I think we're still seeing some of that, but I don't want to be doom and gloom right now. I mean, this is 2 days in a row of positive trade here for the corn market. So let's celebrate something, Jesse.
I was going to say, that makes what, like 5 days out of the last month or so that corn's traded higher or something like. I know it's some crazy stat like that. Charge, yeah. I'm probably wrong, but a little bit to celebrate here. I know though it's been a tough conversation for many folks with basis contracts coming due. Yeah. We got the end of the month here in front of us. That's probably going to add some added volatility. A lot of folks having to decide, do I roll into that May carry again here in this market or what? And I think a lot of funds really kind of forced the hand of some folks here the past couple of days and forced some people maybe into some bad grain trades. At least I've been hearing some of that talk across the countryside.
And, that's what we've been preaching the whole time is you've got to look at your operation and say, okay, what do I have for value here? What is basis doing? The fear is as you see these little rallies and hopefully turn into a little bit more rally, the idea that the basis is going to follow it is probably incorrect. You probably need to be paying attention to how can I take advantage of that basis. And when you do that, you're also seeing, hey, the corn needs to get sold. You got to get cash in your hand. Again, any type of continued movement, I suspect would still continue to be sold. To take advantage of that basis. And then you have to look at it. Do you think flat price is going to rally? And the rally is going to happen with something fundamental has to spark the funds to start selling out of their record short position that they have, and really the cards that you have dealt for us right now. Maybe South America continues to see some dryness. Maybe you see some type of problem that we're trying to make it up right now and trying to create a fundamental problem to create that fund liquidation of their short position. And right now, it's hopefully you can see a spark. Maybe a spark can catch fire here.
Yeah, hopefully we can get some sort of spark because to your point, fundamentally. I'm having a tough time finding some of those things. And I know that a lot of folks are looking for like that final flush out here in these markets to get us a bottom that we can build a base off of. I don't know though. Was Friday it? Put a 3 handle on front month corn. What was that it? Or I don't know.
There was a lot of psychological things that happened, right? You saw, these farmers, they don't want to continue to kick the can down the road. They don't, it's not that they don't have to pay 8% interest, all of them. Some of them are not, going out and having to get operating notes, but they're also not getting 5% interest on their own money. So there's a point where they want to say, hey, let's turn this bin into cash. Okay. And I think that's, the right thing to do. So you come into that first notice day in March, coming up here this week. there's a lot of these basis contracts that'll be done today. And so that sped up some of that liquidation. And no matter how you look at it, this grain market is going to have a really hard time rallying until we get less control of the corn from the producers. And that will eventually happen. Maybe that was the flush out. Maybe there was more, we'll see, come Friday with the commitment traders report, see what the fund position is actually doing here in this type of little move up. So we'll see.
Well, and to your point as well, I've seen some comments on the Market Talk YouTube channel lately and on our social media. There's some folks who are on the opposite end of the spectrum. They listened and they sold corn at, $5.56, $7 in some cases. And so I know that not everyone's in a dire spot. Some folks are sitting back and I don't want to say laughing, but they're looking at a much better position right now, and they could afford to hang on to some of this grain for a while longer. And I think that's part of the root of what you're talking about, is that there's just a lot of corn out there that hasn't moved to town quite yet, Jacob.
Right. There's a lot of hedged corn out there too, that doesn't have to leave. And what you're talking about, we spend a lot of time, talking to producers this whole marketing season, whole winter season. And that's kind of been the tune of like, we hope that you followed some of the recommendations that we actually said and had some hedges in place and had the good marketing opportunity, because when you boil it all down, it doesn't matter where the corn price is. It's all about that profitability. Where are you at on your operation as far as if you're selling above your break-even cost, that lowers what you have to meet that same goal. So, there's been some corn that's been able to let go here with no regard to it, because they've done a good job of marketing as we went along through the marketing season.
On the new crop side, if folks haven't started a lot of new crop 24 marketing, I mean, 460 corn, give or take, doesn't feel like a terrible place to start. But again, it comes back to, what's your cost of production? What's your break even, right?
Absolutely. And, you're setting some targets out there right now. We're looking at a lot of different break evens, and, 450 seems to catch a little bit of it, but you can catch some $5 break evens that are legitimate, concerns that how are we going to get that profitable? And maybe, maybe you're not, so I think using some of these flexible strategies, meaning buy some put options and look for some better opportunities later. And I will, draw the attention to the fact that the December corn closed above the 10-day moving average. That's been a big hurdle for this corn market. So finally closing above that level tells me, hey, I don't want to sell right here, but I would look at putting a floor in here in case we go back down to those comfortable levels or in that same trend that we've been in for the last 3 months, and put some floors in to say, hey, can this thing spark something? Can we get something acreage battle start talking as we go through the month of March and get some type of seasonal spring rally here?
What are some things that folks need to remember in terms of new crop bean marketing right now?
I mean, you're trading, I think we settled 11.30 here today. You still have an $11 price. Most of the producers that we're working through still at a rather profitable, have some opportunities to have profit in new crop. I think that you still want to lay some floors in there, because as you go through there, you still have a wide guess as far as what the South American production is going to be. I think I saw the agricultural came out as 147 or something below that.
Close to that,
almost 10 million metric ton below what the USDA has them pegged at right now. So there's still that opportunity that when we get in, we don't have as much. We saw a flash sale today out of China, or unknown, and so that was something that surprised the market. I didn't say that, right? So that surprised the market a little bit too. That there's still some hope. Maybe that goes into some of their stock building or whatever. That was kind of a head scratcher, but you're hearing rumors that PNW is starting to build inventory out there. Like there's some scuttlebutt that we could have some sales out at the PNW. So there is some optimism. That's why I don't want to get heavily sold here. But I look at there. I think from a fiscal reason, it's smart to go ahead and lay some protection underneath this market, because, like you said, we don't like being at 11. We could be down. We could be single digits if we come out with a bigger acreage number than expected or something of that sort.
Yeah. And to the point about China too, a lot of talk, they're buying Brazilian beans here, a lot of talk of cargoes making their way there, and talk of Brazilian cargoes making it to the US as well. So, I mean, just you look overall at some of those things, and it makes you pause a little bit, I think, in the soybean market right now.
Yeah, I mean, we're building a lot of our hope and optimism for next year's crop going into 2024 and then 2025 on the whole biodiesel, the renewable diesel situation, and what we're seeing, with the plants that are being built and the expansion being hoped for. So you look at that, the domestic crush has got to continue to stay strong. But when you see the products like meal back off another $5 today. It dampers that rally and that expectations. But I think that going forward, when you look at the acreage battle that could be taking place, I mean, you hope that there's some optimism, continued push with some of the tax credit situations and how we encourage this growth to continue.
We are talking with Jacob Burks from agmarket.net here today on Market Talk. Jacob, let's talk the wheat markets real quick, and then we'll get to livestock. Sure. KC Wheat's kind of been the leader here. I'm hearing trade chatter that some folks are worried about how warm it is in the plains, and that's part of the reasoning here. I guess I haven't found anything else better to tell me why Kansas City wheat, for instance, had a nice kind of key reversal there on Monday. I mean, what are you hearing in this wheat market right now?
Well, I do think that the wheat market has got some spark. I think most of the spark in wheat in general is coming from the Russia sanctions that are being put on, that hopefully there's a large amount of wheat over there, like record crops, record exports expected out of Russia, that maybe you're not going to get to reach some of the desired destinations for that wheat. And if that happens, if that continues to happen, maybe that is something that keeps just a tighter amount of available supply on the world market. But yeah, I think that you're first of all, I think the Kansas City wheat probably got beat up a little bit too much in a downward move, and so you saw the high premium of soft red wheat over KC wheat. I think that's a lot of what's going on right now. Is the reason KC wheat's over Chicago is there's some of that spread trading back, liquidating some of those long Chicago short wheat Kansas City wheat spreads.
Well, and of course too, wheat very dependent on those world markets and the cheap Russian values, and the dollar's kind of gone sideways here a little bit too. So maybe that's helping out our wheat markets a little bit.
Yeah, I mean, we're still not as competitive. I mean, the world market is just, it beats us up. We're always going to be that world supply, the world's reserve of wheat. But you get into maybe some optimism in China. We've seen a lot of optimism in China coming over and purchasing some wheat this winter. So, maybe we just find our way back in the market with for whatever reason it is. But there's still some possibilities that we could see, a good chunk of that business come to us if the breadbasket of the world continues to see some problems there.
All right, let's talk livestock. Cattle. We're in Houston rodeo going on. I know you're an old rodeo guy, so let's get into your wheelhouse here a little bit more. Cattle on feed last Friday.
Sure.
Fairly as expected. I know a lot of people looking at that placements number and asking, how come it wasn't as low as we all thought it was going to be. Felt like the market, though, quickly digested it and has already kind of moved on. Do you agree with that?
I would agree with it. I mean, you saw that the cattle on feed number did exactly what we expected in one way of saying, hey, we don't have as much cattle out there. Inventories are tight. And this beef market, this cattle market, I mean, it boils down to one thing, in my opinion. If people are going to continue to buy it or not. The demand picture of how we've stayed very, very comfortable above 290 and a lot of time this year over 300 in the box beef. And so now we're back over that. I think we're 302 this morning. Cattle on feed report saying that we have 7%. We didn't meet the 8%. I think that was the estimates going into that cattle on feed report. But still, we're placement 7% less. I mean, those numbers are going to continue to get lighter out into the fall. You saw there's going to be some catch up in there with the weights that the one. Really the 1 or 2 weeks of winter that we had this year, but did a number on the cattle inventory. But I think as you continue to go forward, you're starting to see the kill. The leverage kind of went back into the feeders' hands, where we saw some weights pull back a little bit. The box beef is staying up. Hopefully the box beef does stay up, so the packers can make some money, so we can continue this cash cattle run.
Well, and to your point about demand here, I think domestically, I mean, if prices keep going up or we start to retain heifers, we start to pull this cattle herd in even more. I mean, what could that do? I'm crystal balling here, third quarter, fourth quarter. I mean, we've said this before on this show that if someone wants a steak, they're going to buy a steak.
Yeah.
But at what point do they say, hey, I'm not paying, $20 some for a 8-ounce, New York strip or something like that. I mean, it's at what point do we reach that level where enough's enough for the consumer? I think that's going to be a big point of discussion here. You just
opened up a can of worms that we could talk about for the next 2 hours. The rest of the commodity classic. When you look at what's available in the consumer's pocket, and if you look at what's going on as far as are we in a recession, are we not in a recession, and you start looking at the economics of where we're at domestically. I mean, you got wage inflation that still has yet to slow down. You still have that the consumer that is still making decent money. The unemployment is not slowed down. So when they walk out there, yeah, they might not like paying $10 extra, but it's just $10. They're going out anyway. Like it's not as, it hasn't been as big a shock when you go out into the restaurants. I mean, we're down here in Houston. That you still stand in line to get a table, and so like and they're eating steak down here in Texas. So I don't know that the demand really slows down yet. The pork and the beef have been very good complementary products to that. They're continuing to rally. They both have some high values, and that's been great for both producers.
Well, and to your point about pork side, I mean, cattle, I feel like have been helping pull hogs a little higher. $100 summer hogs.
Yeah.
Where did that come from all of a sudden, Jacob?
I don't know. That's the continued, inflationary, it's not really falling out of the livestock side, quite like it has in the grains. And so the other thing that's helped is that we do have $4 beef, and we do have, cheaper meal. So that's helped the producer to be able to make some money on this and take this and have some profitability.
Well, thinking about this livestock market as a whole, I think in both cases here, I could throw hogs in with cattle now. I feel like from a hedging standpoint here, things like that, folks can lock in some floors probably at this juncture if they haven't done so already, and listen to maybe some advice from someone who's smarter than me, and take advantage.
We'll see if we can find that guy, right? No, and all that I just said about how strong demand is, and that's why we've stayed strong, and the cattle market stays strong. Is what if it's not? And I think that it doesn't take a rocket scientist to look back in history to see a swap of a pen or something that affects the the demand side. Crude oil and staying strong, or the stock market taking a dive. But you've seen the stock market make highs, and you've seen the commodities start to make lows. And a lot of that, the reason you see stocks and companies making those highs is because they've had cheaper cost. And so that's kind of the rubber band's gotten stretched pretty good. So that at any time could come back together. And then all of a sudden you have a falling stock market, you have certain problems economically, and that could ruin that demand. But back to your real question of what does a producer do about it? How do you handle this? There are so many tools out there right now, whether you're looking at some of the LRP, the insurance products that do a good job of putting a floor in the market, or you're looking at just going out there and getting some hedges in. I mean, looking at the value that you have right now. I mean, we learned in the corn market, when you see ample opportunity, it's very wise to do something to take advantage of what's sitting in your hands right now. And I can't say enough that you look out into the fall, and if you got calves that are going to be sold out there, and look at the profitability that you have, there are some really good ways to put a floor in there and leave your upside, still intact.
Jacob, final thoughts as we wrap it up here from Commodity Classic. What do you want folks to remember in this window? I'll leave it open-ended for you. What do you want to reiterate to folks as they're taking a hard look at their marketing plans here right now?
Well, first of all, I hope this Commodity Classic turns the pattern around, and we actually have a rally during Commodity Classic. Seems like every time we're at Commodity Classic, we see
that would help the mood out, I'm sure. So far, so good, but we got a few days to go. It hasn't started yet, Jess.
Yeah. We don't know if it's good yet or not. So, one thing that I would say is, right now, profitability is not staring you in the face like you saw for the last couple of years in the grains. Okay, it's not just easy to market grain, if you will. You're going to have to look at being creative. You're going to have to look at making sure that your losses may be cut and minimized, I guess, and leave your top side open. So learning how to structure some of those strategies and those plans, how to put something together with the crop insurance that you're looking at buying right now. But on the cattle side too, I mean, there's going to be some cattle producers down here. I think that it's very, very adamant that it's time to go out there and get something done, get something locked in, and just take advantage of what we've been given here, because I do believe that the future is bright for cattle and livestock, that we could still continue to see a rally. But man, it's something that you don't want to sit here and look a gift horse in the mouth.
Well, I know if folks have questions, they can reach out to you guys, the whole team at agmarket.net. I know, too, you're helping develop a revamped app as well. You guys got a lot of resources available online for folks, or with a phone call, don't you?
Absolutely. We talk a lot about profitability. This app that we have is something that can show you the profitability or lack thereof. Sometimes I mean, it shows it there. But, yeah, just check us out at agmarket.net. We'd love to chat.
Jacob Burks, appreciate the time, buddy. Thanks for joining me here as we get ready for Commodity Classic this week. Thanks so much.
Thanks for having me, Jesse.
And that's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.